Hi, everyone. Welcome to Domain Sherpa, and thank you for tuning into the podcast with the best domain name and digital asset content in the world. Today's episode is a Domain Sherpa review titled See You Later, Alligator, and it features Adam, Josh, and Drew. On today's show, we play the domain game featuring mo.co, embryosolutions.com, and restaurantfinder.com. And then we've got the Namejet Gonna Jet segment, sponsored by Namejet, and we talk about some domains coming up for auction, including looksgood.com, highereducation.org, pittsburghrealestate.com, and bridgestreet.com. The Sherpas also talk about how sales have been in the past few months and what their current buying strategies are. We also talk about interest rates and how the broader global macroeconomic picture may impact domain names' values in the near to the long term. And all that is coming up more on today's episode. And remember, if you're listening to the audio version of this podcast, you can also watch the video version on domainsherpa.com and on our YouTube channel at ds.tv. You can also listen to the shows as well on Apple and Spotify and other podcast platforms too. So make sure you hit the like button and the subscribe button where you can. We appreciate it. Also, we're now integrating our shows with Muse.ai, which provides new search functionality for the shows and transcripts as well. So definitely check all that out. And as usual, big shout out to Dan.com, the number one place in the world to buy and sell your domains, with a special platform made for domain investors. With that, it's now time to get into this episode of Domain Sherpa, where all roads lead to domains. What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. Jayon, a.k.a. Sherpa Winfrey, the host and producer of Domain Sherpa, where all roads lead to domains. Today's show is a Domain Sherpa review, where we get into the minds of successful domain investors, the experts, the OGs, using real examples so we can learn strategies and tactics to become more successful domain name investors ourselves. These are the experts. There are 4 segments to a Domain Sherpa review. We've got the grand opening. That's where I intro the Sherpas, do the AKA, see what's going on with everybody. We got segment 2, which is the domain game, where we hear about what the Sherpas recently bought or sold. Everybody guesses on the sales or buy price. We keep score and get some swag to the winner. Swag such as the Domain Sherpa hoodie that I'm rocking right now. We got segment 3, which is Namejet Gonna Jet, sponsored by our friends at Namejet. We review a list of domains coming up for auction and see what the Sherpas like, what they don't like, all that good stuff. And then last but not least, we got grand closing, where we discuss anything we haven't already covered, what's going on in the domain space, looking at the market trends, all that kind of stuff, letting the guests talk and promote, actually my co-hosts talk and promote anything that we haven't already covered and anything we haven't already discussed. So with that, let me go ahead and introduce the Sherpas over to my right. I got my boy Andrew Rosner, a.k.a. maybe I won't even do AKs. No, I'm just playing. Of course I'm going to do AKAs, AKA Morpheus, AKA the Sniper Bob Lee Swagger, AKA every Rosner has its thorn, AKA never going to give Drew up. What's up, man? How you doing?
Doing good, man. All things considered, I'm doing good.
All things considered, man, it is crazy. It is we'll talk about what's going on in the markets and all that stuff. So we'll talk about some of that. There's also a lot of craziness in the world. Don't let my exuberance, overshadow the fact that, we are in very turbulent times and always thinking about just this stuff that's going on out there, plus how it impacts us and what we do. All roads do lead to domains. So anything that's happening in the world is having an impact on what we do on a day-to-day basis. But, it's crazy, but we got to do what we got to do. We got to keep it moving. And, and that's what we do here on this show. So let me keep it moving. And to my lower right, I got my boy, Josh Reason, a.k.a. Bjorn Borg, a.k.a. Prince Harry, a.k.a. Harry Kane, a.k.a. Prince Harry Kane. What's up, man? What's happening with you?
What's up, man? Feeling good. Good to be here. Sorry I missed you guys in LA. Would have been a lot of fun. I had a bit of FOMO.
Oh, yeah. That's what I'm talking about. It's not a good trip if there aren't people that aren't there that are FOMOing. You know what I'm saying? Then did a trip really happen? Did something happen if there aren't people who were not part of it FOMOing? You know what I'm saying? In this day and age of social media and everybody, hyping up their lives and all the mundane things they do to make it seem cooler than it actually is. Although we did have a really good time, and you were missed, Drew was missed, along with a few others. But Yeah, do you have more light in your crib now? I mean, all of a sudden, I feel like it's brighter in there than usually.
Yeah, it does, and it looks more organic light. It looks less like
Yeah,
it's
yeah,
like
yeah. Less of a cave.
somebody turned the sun on for you.
I've gone with two open curtains and the one directly in front of me closed. I think that's the move.
I like it a lot,
Yeah,
man.
that was always the move. That was
Did you
Always.
hire a lighting consultant?
Figured it out
JT did.
all
You
by
could totally
myself.
tell JT did.
Hey, man, I finally got my wall done, so
Yeah.
Your
Looks
wall
good.
looks nice. Your wall looks a little bit kind of like the color of my wall back there.
yeah, you went with you're more of a blue hue. Mine is more of your
I like it.
typical. Yeah, look at that's nice, man. I like the woodwork and everything too.
What
it's
is
good
that's
stuff,
called?
yeah.
That's wainscoting, right? Is that what?
Ooh, yeah, I think something similar, or it's probably like a more particular type of.
Wainscoting was just on my mind because I actually saw it expired. I don't remember if it was on GoDaddy. I think it was on GoDaddy, wainscot.com or wainscoting.com, one or the other.
Man, it's I used to hang with Wayne Scott back in the day, man, back in middle school. You know what I'm saying? We used to skip school together. Me and
Yeah, I
Wayne
used to give that
Scott.
dude a swirly.
Nah, man, no, don't. Hey, Wayne was cool, man. Wayne's all right. He's our boy. Actually, I was thinking about what that word was.
Swirly?
Because no, not swirly, wainscoting, because Adam, when he was moving his location around in the crib, like he had some nice woodwork in one of the other rooms, one of the alternate locations, and
Yeah.
I was like,
The
oh,
one with
that's.
the least
but I couldn't-
Wi-Fi.
But I couldn't think of the word. So anyway, but speaking of Adam, let me keep that moving. So below me, we got my boy Adam Strong, aka John Wick, aka Up and Adam, aka Adamantium, aka Adam Strong to quite strong. How's your portfolio, Fokker? And speaking of which, how's your portfolio, Fokker? What's going on, man? How you living, man? What's happening?
I'm good. Good. Back home.
All right. All right. Well, yeah, good to see you. Good to see you again, all right. Well, I'll go ahead, Drew.
No, I was just gonna say, where are you at with buying new inventory? Are you still buying? Are you opportunistically buying? Are you actively? Yeah, you.
Opportunistically, I'd say. I just haven't been participating lately. So, yeah, in anything.
Just checking
So
out on all things.
I don't think I've made a purchase for quite a while, but I've got a couple things I'm after right now and chasing. But yeah, not participating in the drops, not watching NameJet or GoDaddy or anything. So yeah, so watching for stuff, but yeah, haven't been buying.
How does that feel? So this is actually a really good topic. I like this a lot, and we're gonna go around the horn. But how does it feel to not be watching like the drops, the daily stuff? Like, I think it's interesting how you say you're very targeted with what you're trying to get.
Great.
It's liberating, right?
Yeah. It
is.
I mean, it's gotten to the point. I don't know how it is now, but like kind of. I mean, I'll pop my head in and look around every once in a while and see what's going on, but just the prices and things like that are frustrating. So, and then I know there's guys that are just scooping up stuff by the boatload. So the competition's a little bit more unnerving. I don't know if that's the right word, but yeah, I just don't feel like participating in a environment like that, I guess.
In a seller's market, if you will.
Yeah, it's just not what I'm used to either. So, I was just pulling up my stuff to look at my, the domain I'm going to talk about today. And, I bought it in 2015, but I really bought it years before with a partner. But, I just happened to pull up that year that I bought stuff and I was like $11, like it's $69. And like, that doesn't exist anymore. So
no, that's over.
Which makes us the grandpas of the domain space. But,
if I'm a grandpa, you're a great grandpa.
Yeah. You got more gray though, so
yeah. That's what's up, man.
I just don't use shoe polish. You know what I mean?
Oh,
no shoe polish here, dude.
Oh,
I got grays up there.
This is the Just for Men episode. You know what I'm saying?
Exactly. Sponsored by Interrupt. Bring the ad up.
Here we go, sponsored by Hair Club for Men. Hey, that's why I just keep it all shaved, super shaved, because then I don't even have to worry about it. Am I going gray? I don't know. You know what I'm saying? I have no idea. I'm never gonna know. But
Everything that Adam just said resonates with me. I mean, I it's very hard because I really enjoy going through these lists, even when I don't necessarily have the intention to buy things. But it's very hard because then I find things that you just know are, undervalued. But then you just ask yourself, like, am I upgrading my portfolio by buying this? What am I doing? Like, if I were to sell all of my domains for even a fraction of what I believe them to be worth, I'm going to have plenty of money, and I'll never sell them in my lifetime. It's just not going to happen. And so I don't know. I've just kind of decided, I'm buying here and there if something really interesting comes up, or something that's intriguing to me, or something I've been watching for a long time and suddenly comes. But I'm pretty much of the mind that unless things were to become stupid cheap again, which I don't necessarily foresee, but maybe, I just don't. Yeah, I think I'm all I'm doing is decreasing my average margin by accumulating more names
at that price point. And I agree. I mean, look,
Yeah.
we've watched this over the last 10 years or so, and the increasing sort of baseline price of any decent names in auction has gotten to the point where your acquisition cost for a good domain, is no longer sub $100. It's now plus $1,000. So
it was probably 2.5 years ago. It was probably 2.5 years ago that I said this. That I said, basically what we're going to see over the next 10 years is the alligator jaws. And so the alligator jaws are going to just start slamming shut, where, if the bottom jaw is basically what wholesale investors are willing and able to pay, and the top jaw is what you're able to sell them for to a retail customer. Like, that if you look at a crocodile, you know what I mean? He doesn't close his top jaw; he closes the bottom jaw like this. So,
wait a second, is it alligator or a crocodile?
Whatever.
And we got to go with gators. So, I mean, we're talking. I'm a UF. You know what I'm saying? Gator all day, man.
The point is that you are going to compress that margin. That margin is just going to compress, and we're 3 years probably into that process. I think COVID was really the turning point where, a whole bunch of new people, maybe entered this space. Definitely auctions were already getting more competitive, but really heated up in a material way. And so I think it's still a great business for somebody, but for somebody who accumulated their portfolio on a basis of, I'm looking for a 10 to 20X as sort of a safe baseline because my hold expectations are, 10 to 20 years. That math doesn't apply anymore. And so, the good news is that the risk is you're being de-risked, meaning that your downside protection is now more limited, right? So you could offload it for probably a profit. If you bought names that you bought 5 years ago, 10 years ago, you could now offload for probably less in a wholesale market for more than you paid, make a profit. But you can't replace it for that cost. And so, I think it's a great business for people that that are willing to take less risk, but also less upside to enter the business. But, I think I've cast my dice and I'm, focused on the brokerage at this point and, take the sales that we get from the portfolio.
Yeah, I think that's interesting. And, that you guys.
And that's a very new mindset. That's just something that's evolved over the last 6 months. But that's basically where I'm pretty happy to land. I think it's liberating, I think, as you said.
Yeah, Josh. I want to get Josh's opinion because, so you guys kind of represent sort of this OG mentality. And both of you feel like, all right, we're kind of priced out of the day-to-day in the drops and the auctions. And you guys have accumulated so many names, thousands of names each, that now it's about, hey, when I look at the amount of time left. But I do think that that's a really interesting perspective coming from both of you guys who are somewhat similarly situated. Big domain portfolios, have been doing this for a long time, and feeling like the sort of the auctions have gotten to the point where loading up at that level is less interesting to you, and instead it's more targeted on maybe even bigger purchases, right? Bigger purchases, but much more targeted based on those specific names. And I think that's pretty interesting and pretty cool that you guys both feel that same way. So, Josh, you being more of a new G, right? What's your take on all of this, and where's your head at?
It's kind of, I'm not that sure right now, but to give a little bit of background to that, so I didn't really get serious into buying a lot. I only had a couple hundred names and nothing that good until like the beginning of 2020, really, end of 2019. And then I spent, I would say, a year and a half really like acquiring names, spending a lot of money on names. And I had a pretty clear path. I felt like the prices, even then, I felt like the prices were a little high, to be honest. And everyone was talking about the prices being high then, but kind of just plowed through. That ended up working out really well. But I think that one of the reasons why that ended up working out really well was also due to how good the end user climate was between 2020 and 2022.
Mm-hmm.
I mean, unprecedented, right? So it was a really good time to scale the portfolio if you weren't an OG,
Right.
because the sales were coming in pretty consistently as well. And I would say that on average, most people that had a little bit of an idea of what they were doing, their sell-through rate was a lot better because of that. I would say towards, especially in 2022 and end of 2021, I was kind of a little distracted, as were you as well, and most people who got into like NFTs and stuff. So I didn't buy as much then, but the sales were good. Now I have been buying a lot again, but the prices, they're still high. I think they're continuing to go up. But my portfolio is better than it's ever been at the high end and the low end. And for me, I'm not seeing good sales at all the last like 4 months. Beginning of 2023 was fine.
Let me ask you something though, because I've been preaching to you for the better part of 2 years now that, .co party, that was over, called that one. Then the .io party, that was over. Right? Doesn't mean there's no more sales. It just means that the top of the lunacy was over. And then .ai, I would say probably we hit the top a couple weeks ago. Maybe this week, whatever. But we're at the top of that lunacy. And I gave a great concise thesis about how to think about them, because it doesn't matter if it's IO, it doesn't matter if it's AI. If you are chasing second place, you are inherently always going to be replaced, because there is a ceiling on your value proposition. Your value proposition is a function of what does it cost to upgrade to the .com, right? And so there's a ratio that people are willing to pay. And I've said, I think that ratio is somewhere around 5 to 10%. Beyond that, it's a sunk cost. It seems unnecessary. There's another better alternative. Okay. Whereas if the .com, it's kind of like black or white. You either are a qualified and able, willing buyer, or you're not. But there's nothing to subjugate the value of the .com to something else. Whereas every other domain extension is always going to be subjugated to the value of the .com. What is the replacement value? So by definition, these things are trends, and they will always be. They'll always reach a limit of their value cycle, because, again, there is zero people that wouldn't. I think there was a recent study that just came out that demonstrated zero people want anything as opposed to .com. Like .com is the first choice in every apples to apples. Every single person is taking .com over whatever else, with very, very, very few exceptions that are mostly justified by country code, and market segments. So,
yep. And Drew, real quick, I think that's all great points, because I want to
come back to Josh and say,
okay, Yep.
My understanding is you were going heavy on the IOs, going heavy on .AIs. And so if that's what you've been buying for 2 years and those trends are on their back fucking heels, maybe that's why sales are slow.
So then we should have started this conversation with a question of, so Josh, what extensions are the names that you're seeing?
Those are good points. So I agree with a lot of what Drew is saying with some caveats. So from a portfolio standpoint, minus like outlier, very large.com sales that I've had, the most money that I've made on the portfolio, despite it only being maybe like 20% of my portfolio, is on IO, Co, and actually AI as well.
But what about in the last 3 to 6 months?
Yeah, no,
really the last 3.
So like, Co's like cooled down like long ago, but
yeah,
I still get Co sales. But here's like, I feel like it's important to expand a little bit on what you're saying, despite the fact that I fully agree. Right? I think that you saw kind of this hockey stick curve with .co, where everyone was selling .co, right? And then it comes to an abrupt halt, and it kind of then just like falls into the category of any other extension that is viable other than .com. Mm-hmm. But like, that doesn't mean that it falls into like a .info or like some shit that nobody wants, or a .biz. It falls into like the second tier, like .org, right? .org is
before you just quickly skip over that though, that's not arbitrary, okay? The category of .info or .biz, those are in some sub shit category specifically for actual technical reasons. You cannot get email delivery, right? You cannot get like basically all .info and .biz domains are flagged by every email spam provider because they were all offered at 99-cent, bullshit or free, and so people utilize these things for mass spamming. And so basically you cannot deliver email effectively as a commercial enterprise on those domain extensions. Unfortunately, .xyz has suffered from some of that as well. But that is why those are relegated to some absolute garbage tier, right?
That makes sense. And then like I said, there's a reason for all of these things. I do think that out of all of them, .io remains fairly strong, despite the fact that it's not at the kind of what would you call it? The peak level, the euphoric levels that it was at before. You still get good .io end user sales, and I still get good .io end user sales, but it's just nowhere near what it was from like a I would say the wholesale market standpoint, where you're seeing all of the daily data of auctions like going way inflated. You don't see that right now. But yeah, I mean, like .ai, for example, everyone thinks that .ai is going to be different. I don't think that. I'm
the most dangerous words in the history of human language. Yeah. This time it's going to be different.
Yeah. So I'm on.
Show me one time where it was different. It's never different because we're humans. And we're just animals. We repeat ourselves. We put fancy clothes on. We run around thinking we're talking on some digital fucking communication over a camera. We think we're fancy. But we're just fucking humans. We're fucking animals. We're just emotional, habit-driven animals. That's what we are. And so we repeat the same stupid thing.
Let him finish
over and over and over again.
Let me say this as well, because I do think .ai is different, but not for the reasons that people want to think that it's different. It's different because it's descriptive as opposed to generic. And it's descriptive over something that people are super excited about right now, which is enabling end users to say, I want to get a .ai because people are going to think that I'm cool and hip and I can raise a bunch of money. So yeah, it's popular right now because we're in the euphoric phase of .ai, but Drew has said this before, and he is correct, that 2 or 3 years or whatever from now, nobody's gonna give a shit because everything's gonna be AI, and
it's just redundant. It's just redundant. It's like saying, "Oh, you know what? I think Google should move to Google.search." And it's like, well, why the fuck would they do that? Everybody just knows that they're already a search engine, so it's just redundant. Yeah. You're not adding anything. You're encumbering the brand. You're not.
I agree with that.
Adding any value. It's literally an encumberment. Anything that is not assumed by the consumer is an encumberment to your brand.
Right. So you
Although,
basically
although I don't think we're at the peak. I think this euphoria goes on for a while longer.
Listen, we may or may not be at the natural organic peak, but I can assure you we are at the peak simply because uh, two factors. One is consolidation, and basically you're going to see all these AI companies that very rapidly popped up that aren't like one of the 5 to 10 really big ones that are actually doing something novel and let's say almost like first layer of a all of the ones that were like a service utilizing those things, they never had a chance to ever make money. They will never make money because they're basically a feature of a much larger thing that's either being sold for $9.99 a month or for free. So none of those companies that are like the .AIs, they're all, none of them have a business plan. None of them have a path to profitability. Very, very few exceptions. They're all going to become a feature of something bigger. Okay, that's the first reason why we are at the peak is because none of these have any chance of raising money in the next round, except for the very key 5, 10 major players that are going to do it in different novel ways. Second is just macroeconomics of where we are in the business cycle, geopolitics, and whatever. And like, sorry, but in an environment where I think interest rates are going to go up another 50% from here over the next 12 to 18 months, I don't see an environment where we're creating tons of innovation and growth and tons of new companies raising capital and then spending that capital on domain names. So especially on second choices, less certain markets, I don't see that happening. So I think we are probably at the top. Whether the bubble might have extended under other circumstances, I agree with you, probably still early. But I think because of the other two factors that are unique to the AI market and then macroeconomically, I don't think that we'll see a continuation of this.
Yeah. So, okay, a couple of things there. I think, well, Adam, do you have an opinion on it? Like, are you buying? Do you have a portfolio of any of these other extensions?
No, I bought a small portfolio of .co's maybe 10 years ago. And I think I've sold maybe 2 out of the 30 or so that I bought, all single word, but nothing fantastic, but it paid for itself. But yeah, I haven't been dabbling in AI or IO or anything. Just kind of thought about it, but just stay in my lane.
Stay in your lane. I like it, man. I like it.
So know your role.
So what about?
Gotta give Josh something to do.
Yeah, exactly.
Less competition. All right. So Josh is saying in the last couple of months he's seen some slowdown in sales. Are you seeing the same kind of thing? I mean, you guys that you can share.
It's funny. Josh said something about unprecedented sales like during the COVID period. I just like I'm trying to backtrack to figure if that was like the best that I've ever seen in terms of sales. I don't know, Drew. What do you think about time periods and things like that? Was there a period of time that was like maybe after 2008?
Hot? Yeah, but I think that each of these successive periods did get bigger and more frothy than the previous. So there was that sort of 2008, 2009, 2010 maybe period where I was kind of like, that was kind of the blow off top on parking. There was a lot of consolidation in portfolios. There was just a lot of money flying around. You had private equity guys coming into the space trying to buy up portfolios. There was just a lot going on. There was a lot of fluidity in the domain market. Then there was 14, 15, which was to this day was the most absurd thing I've ever witnessed with the Chinese and the numeric market and the just absolute pure liquidity that was available in any of the sort of scarce domain names. 2 letters, 3 letters, 4 letters. You had the chips market. It was like basically $1,000. You could basically exchange a 4-letter Chinese premium, meaning a Chinese premium was basically, it didn't have any vowels.
No vowels, no
and it
V's.
Didn't contain a Y or a V. Okay. Yeah. If you had a what we called a chip at the time, Chinese premium domain, 4-letter domain, it was basically interchangeable for $1,000 or a gold coin. And literally, it was basically interchangeable, fully liquid for a period of like, I'm going to say a year and a half.
Yeah.
These things were basically par value. It was like a stable coin for a gold 1 ounce
Was.
coin or $1,000. Just you could just literally somebody could send you a spreadsheet. You didn't have to look at it. Say how many chips are in here. 250. Okay, I'll give you $250,000 for that portfolio, and it was liquid for that. Maybe you put a little discount on it, and then you could go drop that on NameJet, get a little premium, and there was a spread that could be made there. There was an arbitrage opportunity at that time because of the available liquidity that was unprecedented. I've never seen it before. I've never seen it since. But names didn't sell at the levels that they did in the 21-22 run, which was just, again, I think an overwhelming increase all at once, a tidal wave of demand met a bottleneck of supply, and prices got silly. We sold. There was just, it was really just like unfettered demand for premium domain names. And so that was 2020. What was it? 2021.
Yeah, but real quick, just
still to this
interrupt-
time,
Yeah.
that was about 20 to 30% more than any year since.
And we'll get back to that in 1 second, but I just wanted just a little bit of, just to add something to the 2014-15. There was an app that was similar to the securities app on the iPhone. Do you remember this? This was the Chinese app that basically broke down the different categories of domains as to what the floor price was at that time, and would show if it was up or down. Like during, so literally,
and you had large entities in China that were literally doing loans at an LTV of about 70 to 80% of whatever that app said. So you could go to them with a portfolio of 10,000 four-letter chips and say, $1,000 each. All right, we'll give you a loan of, if the portfolio is valued at 10 million, we'll give you a $7 million loan against that portfolio at like 8% interest. And and then these people would go out and then they just kept doubling down and getting more, and it became it was crazy. It was crazy.
Yeah,
but I think it was a glimpse of I got really excited at that time because it sort of, I think, gave us a glimpse of what I think the domain market can be. But we just ain't there yet. And I don't think numeric domains are or just who knows?
Stuff,
I don't know.
Well, so a couple of things real quick too, though, to add some context. For the Chinese market, numeric domains had a certain value as well because the numbers can be representative of words and phrases in China.
Sure, but again, that's a narrative, and it allows everybody to go, oh yeah, okay, that makes sense. More money. But reality is,
I know. But I'm just saying that there was
percentage of those things that actually sold to the end users because of that reason is probably 0.01%. Maybe it's 0.001%.
I don't think that they ever. That was some of where I think and why it ultimately fell apart. Right, is that because they never really were able to then connect the dots to the end users. Like even when you talk to the folks in China and our partners at the time, they were. Effectively establishing these things as investment vehicles, right? Because you'd have these, groups of people in China, families that would be investing money in different investments. Domains became an investable piece of what they were into. They knew domains were a key aspect of the internet. But what they didn't really get to was connecting the dots to true end users to realize that value, right? Which is why I think when you saw in 2020, 21, 2022, which to me was more of a natural sort of, it's not even a bubble, but like a natural wave that was really based around end user use of domain names. And it was more of a function of money going into the economy that was leading to investment of all sorts of shapes and sizes, people buying names because they wanted to start businesses, people, companies that had a bunch of money so they were able to spend money on premium domains, all those kinds of things. So it's like, you almost just need the combination of
ain't no money like government money. You know what I'm saying?
Free government cheese. Meanwhile, I'm drinking coffee with an enormous coffee cup, which makes me feel like Honey, I Shrunk the Kids. You know what I mean? Like I feel like you guys don't realize it. If you didn't know me in real life, you'd be like, is he 3 feet tall with that big old coffee cup? Anyway, so Yeah, man, wild times. And so back to my question then, Adam. And that was a nice little jaunt down memory lane. But what what are you seeing lately? Because that was the question.
No,
Is are
you
you
asked me
seeing the
if I was
softness?
doing
Are you seeing
AI
the
and
softness that Josh is referring to in some of your stuff? And is your business the type that you even see that? You know what I mean? Because are you guys selling more like, on not as constant of a basis regardless? You know what I mean?
yeah, okay, yeah. So I did take you down memory lane. So um
Which was awesome. Love it.
yeah, I guess like since I'm not buying and I just equate the not selling to just because I'm not buying. I'm just not super active, right? So it's
I
my
got you.
fault.
Yeah.
And it really, honestly, for me, it is a little bit my fault. I'm not super proactive in, listing in marketplaces and putting up buy it nows, and uh, I kind of just let it ride. So, but with that said, it's even if it is a different way of doing things than everybody else, I do feel that there's some uh, softness in the market. So I'm still I've done pretty well this year, given that I don't chase things. But it's nowhere near. Last year was pretty rough, but this year's kind of on the upswing a little bit. It's wrapping
Okay.
up, but yeah,
No, but
I've
I
had a
mean, that's good.
fairly
Yeah.
decent year. Yeah.
Yeah, as have
So
we, I mean, we've seen it in pockets. We've seen big sales, and Drew's spoken about this and we've spoken about this on the show. Maybe not necessarily the volume of names. So I think it might also depend on, what your method of selling is and also what your portfolio looks like specifically. But we still see some movement. So, it's not like, we had July was a month though where we would have kind of spoke about the space and the health of the market, kind of the way Josh is describing his experience currently, where everything just dried up and it was like dead for like a month where like nothing happened. And then all of a sudden we had a couple of huge sales, and then we've had some other stuff. So I mean, it's interesting because it's just sort of this flow of things. But I think that's part of where we are now, right? I think the economy is sort of in this sideways movement across markets. Interest rates are way up. People are investing. There's less money out there. They're literally trying to have, they're trying to literally put the blanket on the fire to try to bring down inflation, and in the process, stagnate things. And so you're going to have some of this now where you're not going to see a big old wave and bubbles that are going to create all sorts of this exuberance and activity, until the next time that the money printer go burr and then shit gets wild again. So, and plus you have turmoil in the world now. I mean, there's some really crazy shit happening in Europe and the Middle East, and that leads to uncertainty and scared and nervous folks that are not trying to spend or invest money if they don't feel pretty good about
It's
it.
going to be a very interesting, you know, it truly is going to be an unprecedented set of circumstances that we're heading into, or maybe we're already in, whereby we basically, whether the United States itself is at war, it's basically, let's say, playing a supporting role in at least two fronts, potentially three. It's got a whole bunch of problems at home. All of these things, without being political about it, all of these things are going to require a tremendous amount of funding. Okay. And we're already deficit spending. And so we're going to be, there is no choice. This isn't like a debatable thing. You can debate what the consequences are, but the reality is quite simple. We will have to monetize the debt, and that means basically the Fed is going to be buying. The Treasury issues the debt, and then the Fed basically buys it because there's nobody else to buy it. And so, we've seen that movie before. We've seen it multiple times, right? It got basically invented, after 9/11, and then expanded upon after 2008 financial crisis, and now and then COVID, we really mastered it, and now we're going to see the same thing happen, but instead of in an environment where interest rates were continuously falling and ultimately went to zero and even negative in some parts of the world, we're now going to be doing it into a rising interest rate environment. And because there's no foreign buyers for U.S. treasuries, the only way to attract anybody to buy those treasuries is to keep raising interest rates. So it actually has less to do with inflation and more to do with, okay, what is the price we have to offer? What's the coupon we need to offer people in order to get people to step up? Banks, banks who have been burned by, let's say a 30 to 50% devaluation of their assets that they were literally forced to buy by the Fed. And then, they're like, surprise, rug pull. We're going to devalue these assets that you're holding, these long-term bonds, by 50% and basically bankrupt you. So all of the natural buyers, China, Russia, Europe, and then U.S. banks, those are the buyers, natural buyers for treasuries, and those are basically all gone. And so they're going to have to price treasuries at a rate because what's coming is an unprecedented amount of treasury issuance in order to fund all of this stuff and more. They need to issue debt, right? That's how the government works. And unfortunately, we're going to have to monetize that, which is literally what people mean when they say money print to go burr. Okay. And so money printer is definitely going to go burr, but instead of it going burr in a zero interest rate environment, the more it's basically like a death spiral, because the more issuance the Treasury does, the less demand there is for that issuance, which means they have to keep raising interest rates with each issuance in order to create more demand. Because at some point you're like, oh, wow, Treasury is going to give me 7%. Historical average of the stock market, 7-8%. This is supposed to be no risk, right? Then you have to start asking yourself, well, maybe it is risky if I have to pay, Anyway, so the point is, we have never been in an environment where you have an enormous amount of debt issuance. At the same time, the interest rates are rising. And that has enormous economic implications that all of us really should be understanding. Whether this stuff bores the shit out of you or not, I don't care who you are. If you're a librarian, if you're a nurse, you're a domain investor, you're a Wall Street investor, this is going to affect so many aspects of your life that it's pretty important that everybody sort of gets some level of understanding of what is happening and what's going to happen and why it's inevitable. And it's not really debatable. It's not just a headline. It's literally going to be touching you at your front door. It already is. And
I think that, look, I mean, for me, it's not
though, is what is that going to, what if you are a corporation, let's say there's going to be a lot of corporations that just death, you cannot, your company already had a 6% margin. If the government's paying 7% and your ability to borrow money is now at 11, 10, you're done. So we got a lot of those. Might be 30, 40% of corporations in America. If we get there, if we get to 6.5%, 7%. And then you've got, let's say, strong companies, strong balance sheets. They've got cash. Well, they're going to start asking themselves maybe it makes more sense for us to just invest this cash rather than do M&A or invest in innovation or, what have you. And that's the environment that we used to see in the 80s with high interest rates. And that's why you didn't see real innovation taking shape, in my opinion, until interest rates started falling. Because when you have low interest rates, people are forced to take risk to chase yield. And that applies to all forms of business and individual actors. Anyway, so I'm just trying to basically demonstrate how important it is to understand that bigger picture, to make decisions about what you do with your cash. And, I think that affects domain pricing. I think that affects, flexibility on pricing, a whole bunch of different stuff to consider.
Yeah, man. Well, and to me, it doesn't bore me to death. It kind of scares me to death, but I think it needs to scare you more into action, right? And then I think that's the kind of thing to figure out. The hard part is that a lot of it is you have to wait, see what's going to happen. You try to read the tea leaves and then act accordingly in order to, get out in front of some of the trends and things.
Well, I guess that's my point, is that, most people are paralyzed because they think we're reading tea leaves. but there are certain things that are inherently just clear
Sure, they're
and true.
facts. Yeah.
And I think what I just laid out is one of them. I don't think that's no. What that terminal interest rate is totally speculative. None of us fucking know. But the implications of it, certain parts of it, are these are known knowns. Like we have to issue more debt. That's not.
No, I'm with you.
That's
But
not-
let's do this because, just so that we can, keep it moving beyond talk of death spirals. And anytime we're using the word death, it's in business, it seems not great, So, and I'm a positive person by nature, you know what I'm saying? And I'm trying to
I'm
keep
a realist.
this show
I'm
light.
a realist. You know what I'm saying?
No, as you should.
Listen,
You should be a
the
realist.
road
Look,
to hell. The road to hell is paved with fucking rainbows and butterflies.
Yeah, and the
That's what
best
I'm
of
saying.
intentions. Anyway,
Yeah.
toxic positivity, man, is still toxic. But hey, look, no, I'm with it. I guess then
Everybody could do with a hard dose of reality. Tell you
well,
that.
let's keep it moving though. But I guess then what I would say is, in light of that, right? So what is the answer? Is it to not buy domains? Is it sell your portfolio? Is it buy gold, buy Bitcoin? I mean, there's probably a lot of different things that you can think about based on how that's going to go. And
Well, I
we've been
think I
surprised
guess
before.
part of what I was saying is nobody knows, right? We have literally, this is truly unprecedented, and so we don't have any idea how all of the very complex elements of the global economy and the financial system are going to react to an environment where there is way more supply than there is demand of debt issuance, sovereign government, and this isn't just the United States. This is everybody, and so what does that mean, right? And the high, what people realize, like the higher the interest rate goes, the strong relatively to other countries, stronger the dollar is going to get. Stronger the dollar gets, the weaker every other economy and every other currency in the world gets. And so, I think in the short term, I think you want to have a lot of cash. You want to just make sure that you are, you got your expenses covered. You want to be working towards being in a place where you got expenses covered, where you can keep your business running, be in an opportunistic position, because there probably will come a time in the very near future where there will be opportunities. And if you are, a specialist in any particular niche field, whether that's domains or some specific area of domains, stay in your lane and be focused and, be prepared with sufficient cash reserves. And this is, when Lord Rothschild said, infamously, what is it? When there's blood in the streets, what is it about? That's the time to buy.
Yeah, or
I
the
don't
Warren
remember the
Buffett,
exact quote.
be.
I think it's actually attributed to originally to Lord Rothschild, but
it's the thing
it's
about be
something about when
bold
there's
when
blood in the
people are
streets.
fearful, and
Yeah, exactly.
and all that.
Yeah, same thing.
Yep.
We are entering that period of time, so it's good to be in a position where you're well equipped to be opportunistic, if you are so lucky, and if you're not so lucky, just to secure yourself and your family, to the best of your ability. But I not fear mongering. I just think that we are very likely to enter a very tumultuous economic and geopolitical scenario that is going to probably make what we're looking at today small potatoes.
Mild in comparison. All right, but let's keep it moving, because when I texted Josh and Adam, I didn't say, "Hey guys, you want to be on the show so Drew can vent about how terrible things are." And how
the positive note of that, okay, is that applies unfortunately to probably the vast majority. But on the ultra premium side, again, it's kind of like what I said probably a year ago, which is like, okay, I think that everything I just said does have negative implications, but it's going to force the cream to the top. And that's what happens always. And so I think we'll still see, even though that certain market, probably that mid segment of the market gets hurt the worst, the upper end will probably do well. And maybe the very low end will probably do well, right? Your $500 to $5,000 sales with buy it nows that are readily available and easy for people to make, and reactive purchases, those are going to probably do well. The high end sales that are selling to the exceptional companies that are benefiting from basically their market share growing by the loss of competition and the inability of other companies below them to make innovative investments that can allow them to compete against the larger companies, the exceptional companies that are out there in every segment are going to thrive. They're going to do better than they were doing before. And so those are the ones that are not buying the training wheels. They're buying,
big bikes.
Yeah, they're buying the Ducati 1600.
Yeah. Oh, that's good. That was a good. We missed that opportunity. It's like they're not buying the training wheels; they're buying the big wheels.
Yeah.
All right. So, all right. Well, cool. With that, that was great. Now we actually get to go into the domain game, so we get to say at the 45 mark or whatever, like the 1 hour mark. We actually.
Yeah,
but I think
that was
very
one of the most
important conversation.
domain conversations we've had in a long time.
Oh, I know, and I actually agree, and that's why I wanted to make sure I fleshed it out. And when it started with Josh talking about some of his experience in the market, and then also the two of you talking about your position on buying, and all that. I think this is really good stuff. This is actually some of it matters more than what we're going to continue to get into. And to clarify, you are right that alligators' jaws operate the way human jaws do, where the torque and everything happens from the bottom. The upper part of the jaw is literally just an extension of the skull, so.
Man, all these years,
what about
you
a
still don't
crocodile?
realize I'm just always right.
Well, crocodile, same thing.
Still
Crocodile and
haven't figured
alligators'
that out.
mouths work exactly the same way. Go Gators! All
Their
right,
teeth just go down.
and then all the force is when the mouth closes
The
versus
lower
when
mandible.
the mouth opens.
Lower mandible.
So if you end up wrestling an alligator, you want it to get its mouth closed, then you want to hold it closed. And if you want,
I
you
bet
can
you
also
I
try
got
to
a
cover
book.
its eyes to
I
make
bet you I
it
got a book for
harder to
that.
see. What's that?
I bet you I got a book for that.
You probably do. All right. Well, good stuff, yo. All right. So turbulent times coming. Take care of you and yours, and be ready with cash and reserves and things to potentially take advantage of what will absolutely be some inefficiencies in the market created by a ton of turmoil. So that's what I'm hearing, and we'll see. We'll see how it goes. But all right, domain game. Let's do that. Let's play a little domain game. And let's start with Drew. If you've got a name, you got a buy or a sell.
Yeah, okay. I was going to the one I picked out was mo.co. But you know that one, so
yeah, I do know that one. And as you talk about how we just got done talking about how .co is the worst, and he's
Did
like,
you sell it
no,
or did you buy it?
right. No, I sold it. We bought it, back when
we can do this one. I don't care about
Juan
missing an
originally
opportunity.
launched.
Yeah, if you're down to talk about it, let's do it.
I would be interested to know what you got for that.
Yeah, let's do it. Because even if I have to bow out of this one, I don't care. I got plenty. So I'm literally swimming in swag over here. You know what I'm saying? So, although I do like to win. But all right, so let's go. Adam and Josh, pick up your phones. Get ready to flip it. We're talking about the sales price on mo.co, baby.
I don't have my phone. It's in the other room. You guys made me move. So hold on. Oh,
I was going to say, or just have Josh. You say yours, and then Josh flips his. We could also work it that way, but mo.co, baby, let's go.
Mo.co.
Mo.co. I got my glasses too.
So our astronaut, who I for a very short while attempted to sort of make our mascot, but I don't know why I thought anybody would care beyond me. But his name was Mo. So it was Mo the astronaut, and it was Mo Money. His name was Mo Money, and so we were going to use Mo.co
as Money. His name didn't change because he didn't die or anything.
I sell his domain. You might as well be dead.
Once you sell the name, then that's it. All right, so
Mo.co. Mo, you're dead to me.
Sorry, Mo. Rest in peace, Mo.
Your memory, Mo, is a blessing in the form of Federal Reserve notes in the bank account.
You ready, Josh?
Yeah.
Here we go. I'm taking over hosting.
All right, let's go. So Josh,
okay.
So for those of you who are only listening and not watching, we got Adam at 45,000 and Josh at $69,069.1. You know what I'm saying? 69,691. All right, who gets the point?
Josh gets the point, but he's still way off.
Go.
You crushed it, huh? You crushed it because of that .co swag.
It is the .co vibe that got it. That got it done. What was the?
You know what? I will actually say the .co we have done very well with .co's. We've had a bunch. We sold deep.co for a big dollar amount. We sold. We've probably made 20 .co sales that were like 50,000 and up. Anyways,
Well, I think that,
sold it for what was it 99? I think it was 99. Was it 99, JT? I think it was 99,000.
yeah, I mean that's what I thought it was.
I think it was
I
99,000.
got to go back. And,
He's like, yeah, man. I mean, I don't know. Just pay. I just got paid. That's all I care about.
you know what I'm saying? I'm just like, I'm over here with the new watch. You know what I'm saying? I don't know, man. I just see the dollars coming in the account. No, that's yeah. But well, and this is a point.
And
I'd
so
like
we
to
bought that when the .co registry, took over from Columbia when it first launched, and they released the 2 letters, and they had a special program, and you could like make installments. They were the first ones to do this. Like it was like a, I don't know, 3 or 5 year installment thing. And I was like, all right, MO is our initials for media options. And it was like I think it was $5,000 a year for 3 years or something. And I was like, all right, I'm going to do that deal. I'll take that deal. So I took mo.co, I think 10 years ago or something, we tried to launch, or 8 years ago or something. We launched like a marketplace where we tried to just list, names, but we never really did anything with it. And so, anyways, it was just there. It was something I always had an affinity for, but at some point, I have a higher affinity for the Benjamins.
The moolah.
Yeah.
No, and I mean, look, I just wanted to make a point too, because when Drew was going off about alternate extensions, because we have, in fact, we're going to have a blog article that we're going to drop on the site. We did a little bit of research around, premium domains on alternate TLDs, and everything always comes back to it's overwhelmingly obviously .com, right? But I do think that, and what we see, I mean, there are these sales that happen, and they're not exactly outliers. I mean, good names are good names. And even on these other extensions, it's just that, certain ones will go through these waves where they have this, sort of period of time. And we're seeing it currently with AI. We saw it with IO. I think once that, where they're not going to be able to sustain at a certain level where they just get to. But then once they settle down, I think you do have some of these that recurringly.
But you're saying the same thing I was saying, except in a less concise way, which is that the upper limit of where they can go is some ratio of what the value of the .com is. And so let's just say mo.com is, let's say it's $1 million domain, right? The lower limit of that name is somewhere around $1 million. Okay. The value is probably more than that, but the market price is
2 million,
roughly $1 million, right? It's 800,000 would be a fire sale. 1.5 would be like, a low end, retail.
Yeah, no, look, 1 to 2 million. So, you're right. And then so when you look at what you got for mo.co is about 5 to 10%.
Exactly. And so that's the ratio. And I'm not making that shit up. We went back and looked at like strong.co sales versus the exact same SLD in .com.
That's a fair point.
The strong.com sale versus the strong.co sale, the upper limit is somewhere in that 5 to 10%. Same applies for AI. The same applies for all of them. It's just every time. Once you get above that, people start asking, I don't know. Maybe it's better to save up and get the .com. Maybe it's better to pivot altogether into another name. But when you're second best, there's a limit to what people are willing to pay for the second best option. There has to be a strong value proposition in the form of price.
Yep. No, but the only other thing I was going to say is that then it's a matter of which of the extensions fall into the ones that can qualify into that second tier, right? Because then you have a whole bunch that fall into in a non-existent tier.
And that's just group thought, right? That's just group thought. That's just there's suddenly everybody. Oh, one cool founder in Palo Alto launched their business on .do, and now Dominican Republic's the hottest domain extension in the world, right? It's just people go, oh, look. I'm not trapped in this enigma of having to spend a lot for a domain because Joe Blow on that new hot AI company launched on .ai, and now I've got this green light to buy also a .ai that's going to cost a fraction of the .com. And then they do that, and then they go build a business, and that business gets successful, and they raise some money, and they go, oh shit, we're riding a bike on training wheels, and we're going downhill real fast, and the wheels are going to fall off, and I need to get on a real bike. and then they have that realization, and then they upgrade, or they fucking die. And it's the same thing, and everybody overcomplicates this shit. But everybody, you either gain momentum, you're going downhill, you start accelerating, the fucking training wheels are about to blow off this thing, and you're going to fucking die, or your business doesn't get momentum and you're going to die anyways. But either way,
Not a
it
die.
all
Not a
goes
die.
to you're either going to get to
Yeah,
.com or
spiral.
you're going to die. And there are very few exceptions.
No, I think that's really well said. And shout out to .do domains. I'm about to go register a bunch of Dominican Republic, and it is, by the way, the Dominican Republic is the CCTLD is .do. So
Shout out
to
Max Kaiser. I was just channeling my anybody who knows who Max Kaiser is. He basically
Bitcoin evangelist and shit. He's like the dude with
he evangelizes Bitcoin in the same emotional way. Like, how can you be so stupid to overthink this? It's simple. Just realize the logic. Anyway,
Well, speaking of
Thomson
actually,
Reuters.
nothing that we were just speaking of. Josh got the point. Let's keep it moving. Josh, you got to buy or sell?
do
What
they?
you got?
Thomson Reuters owns that. That's great.
Yeah.
Did I what?
You got to buy or sell? I'm sorry. Thomson Reuters
Oh.
owns what?
Deathspiral.com.
Oh, nice.
Oh, damn.
That sounds pretty random, but yes.
I have a couple of sales, but they're so boring that I can't even bring them up. Let's go with a buy.
All right.
We'll mix it up a little bit. What about embryosolutions.com?
That's a terrifying name. Oh, man.
We're good. You're not in some eugenics type shit or anything.
Yeah.
Josh. I don't know
Whoever
where
I
your
sold
head's
that name to, I'd be like, can we investigate what's going on over there?
Put somebody on a list, man, whoever you sell
Yeah.
that to. Embryosolutions.com. It's like you either big brain or you
Embryo Solutions, because you don't need men anymore.
Yeah. All right.
Why are there so many companies that do that?
I
That's
don't
the
know.
question.
Yeah, well, I mean, because everyone's trying to crack the genome code, and and biotech is big business. So, all right, well, let's talk about that then. Embryosolutions.com is a
It was a
buy.
buy.
Okay.
Buy by Josh. Embryo Solutions. All right, so let's see what's up. All right, y'all pull up a number. I'm probably way low, but I don't know. All right, go ahead and flip it. All right. Oh, okay. So Drew is
That's
666.
Drew.
Man, is it because it's Halloween month? Speaking of which, we got to get Sherpaween on the books.
No, it's because that's a devil. That's a fucking devil shit. Embryo Solution. That's like
666 for Drew, 899 for me, and Adam was at 1200. Am I right, Adam?
Yes.
And
Yeah.
Adam is at 1200. So let's see what's up, Josh. What'd you buy it for? Who wins the point?
I can't remember, but it was $11.
So that's Drew. Drew with the win and the point. All right. So and then so you bought it because of just the amount of sheer companies that are out there doing this kind of work? Like
No, I just wanted to do one from the pool of like low value names, just to like throw one of those out there because we never do them. It's always buys that are at least at the mid tier.
yeah,
Normally,
well, and
at
I
the
think it
upper
brings
tier.
up an
So-
interesting point. You guys were talking about names no longer being available in for cheap, and is that
here
the
comes
kind of
that
name-
yellow brick road to hell, full of rainbows and butterflies. Listen up.
Is this the kind of name? So you think, what are you going to sell this for $1,000? Like, what are you going to do?
No, like I don't know. That's what am I gonna? I'll sell it. Probably sell it for $3,000, and I would say it probably has that kind of name. Probably has a higher sell through rate than your average portfolio holder at that price. I mean, the reason why I brought it up is because there's probably like I don't know, 50 of those names or more, or like way more than that drop every day, and they're names that sell well, and if you're good at buying those type of names, there's still a perfectly viable way to get into the industry and scale a portfolio if you're like decent, right? You just gotta look for those kind of things and you can get them. It's like embryosolution.com was developed. You see like embryo adoption and like, solutions is a pretty typical add-on to keywords where businesses are involved
you love you some solutions.
just like
we've talked about this in
I
prior
mean,
shows. Like, you
yeah,
love
it could be
that
solutions. It
qualifying
could
word
be
that just yeah.
yeah, or
That's
labs.
great.
Labs is a good if I saw like embryolabs.com, I'd be all over that shit. It's just like, I don't know. I just wanted to throw something different out there.
No, well, look, it ties into what we talked about earlier, where these guys are like, hey, I'm really not buying domains. I'm staying away from the auctions and the drops. It's too much of a pain in the ass. I like having the freedom to not have to be dialing in every day to see what's going on and be active. Although, you represent a different sort of wave of domain investor at a different time in your career and your life. And you're still stacking names, still building that portfolio. And that's, this is an example. It'll be interesting to see when you sell this one and when and how long and how much. And because it will be, it might be years, but it'll be interesting to see.
If you want to build a portfolio today from scratch and you don't have a massive, massive bankroll, you have no choice but to go diving in the deep and taking a chance on those names that sell at like 1, 2, 3, 4% max, right? So like, I mean, you got to talk about those some of the time, I guess.
No, I think it's great. Again, I think it ties in perfectly to our earlier conversation. Love it. That's a great choice. Drew gets the point. Drew and Josh. So Adam, if you got a name, we'll leave this to Drew and Josh to guess, so that we can get a winner and then move on to name, Jake, and eject. Because we're getting a little bit tight on time. But so what you got? You got a buy or a sell?
I got to sell.
Okay, I'm making money out here. Let's get it.
Restaurantfinder.com.
Ooh,
Restaurant Finder.
Well, I like that one, man. I might want to guess after they guess just to say where I would have been.
Restaurant Finder.
Restaurantfinder.com. This is
We've moved on from Friend Finder. Now we got Restaurant Finder.
because once you found a friend, now where are you going to go with that?
Now you need a restaurant.
You got to go out now. It's time for
natural evolution.
All right. Friend. Now we got to find an activity.
Restaurant Finder. That's a real consolidated space. You got some steep competition. Restaurant Finder.
All right. Let's see. Josh and Drew, you two. We are in basically almost like sudden death. Oh, okay. I see what you actually. That is exactly the number. Well, not exactly. I'll tell you what I would have gone with. All right, flip it, Drew. Oh, okay. We're at $10,200 and $24,895. For what it's worth, I would have gone 9,999. So I would have ended up taking the under.
I was gonna go 18, and I went up a little.
But Josh is like right where I was, like as far as my thinking. So how'd we do? Who gets the point?
Yeah, well, I'd like to know the reasons before I reveal, like why you're in the mid range. Why not more?
All right, Josh, why are you only 10 G's? What's your thinking?
I don't know. I remember thinking recently. Can't remember. Oh, yeah. I'll tell you why. I normally go a little higher for Adam, but I remember thinking when I was watching your episode in LA that Adam was going to like do a massive number on whatever that domain was, like some podcast name. And then he came in with like this little pea shooter sale, and I was like, "What?
Ooh, okay.
What? How much did you send podcastagency.com for?"
I can't remember what it was.
I think it was 25, maybe.
It was actually quite a good sale, but I don't know. I just feel like Adam
it is a good name, though. I think, yeah, that is a good name.
I just feel like Adam always sells names for like a lot of money.
So then you felt like you went against that this time.
Yeah, but now I feel like he's just not doing it anymore.
He's entering a new phase. He's entering a new phase of his life and his career. Drew, what about you at 25K? What's your thinking there?
So to me, it's a $15,000 to $25,000 name. I was going to say 18, and I said I'm going to go up. I feel confident it's more than 10, but the reason I look at this and I go, okay, if you're in that space, you're trying to compete against Google, trying to compete against Grubhub, whatever the other one is, all these guys that are basically trying to surface local restaurants and reviews, right? And so, if you're doing that, you're one of two things: you're either dumb or you're well heeled. And so, I think it's a strong brand in a super competitive industry that you're either dumb or well tooled, well resourced to enter. And so I think 25 is a fair price. What's interesting is if I'm thinking about it, right, which I don't know if I am or not, then probably that person would have paid more. But it's a hard name to say I'm going to price it 75, 100. But anyways, I'm interested to hear what this one went for.
Yeah, I mean, you won.
Bang.
It was 25.
Drew with the win.
But
right on.
yeah,
it.
so back in the day, I think I mentioned earlier that I bought this with a partner. Shout out to Harvey Kaplan.
Harvey Kaplan.
I haven't talked to old Harvey for a long time, but Harvey and I have bought a portfolio of domains together. He was a finder.com kind of guy. I think he still runs AutoFinder, or I have to look it up. It's either AutoFinder or CarFinder, which is a phenomenal name. And at the time, he was picking up a lot of brandable stuff like this. So we partnered together, bought a group of names, and then he kind of ducked out of the space. We had this group of names together, and I think I paid, what a fair market price we agreed upon, and I just picked up the rest of them. And this was one in that batch. So I think my booked price was like $2,500. I think I gave him for it. So, and that was probably 2015-ish. I think I bought it from him. So, yeah. So I don't know. I got at the time,
what you guys
probably
bought
only
it for?
bought it. Yeah, I would have say, I don't have it because he was buying it on Snapname, so I'd probably guess, a couple $100. So yeah.
I dig it. That's awesome. Well, I think it's interesting because we've been spending a lot of time repricing our own portfolio, and you talk
it was
about
a buy
putting-
now too. Sorry.
Oh, that's what I was going to say. And then
The frustrating thing about it was, Drew, you were right on the money about like your assessment on who the buyer was. I don't know who the buyer was, but I know that they're using Market Monitor. So
it's somebody big.
That's always fun to go into your escrow account and look and see who pulled the trigger on the buy it now. And like,
yeah.
But I don't know that. I mean, obviously, like, so the reason I asked about that was because I kind of, always seller's remorse on situations like that. So I don't feel bad about it because.
But so here's the deal. We at Media Auctions, we've become extremely confident in sort of what we call buckets, right? There's like these buckets of buyers, and these buckets are very well defined in what they're willing to pay. And so there is a very clear, in fact, I would argue it's probably the single most defined bucket is that, call it 10 to 25. A little bit stronger brand, 15 to 25, a little bit weaker brand, 10 to 15 type of thing. But that's a really, really clearly defined bucket. And I think that this is a $15,000 to $25,000 domain, like I said, and you sold it at the top end of that range. And so I think you got the full value of the name. Beyond that, you have to be surgical. Beyond that, you can't put a bin price on domains. Beyond that, you need to be evaluating each one at a given time with given circumstances. And doing so means accepting the loss of a whole bunch of sales that otherwise would have happened, right? And so because those sales happen because you put bin prices, right, is what I mean. And so I think that you got the full value of the name, but I think, thinking through it the way that we just discussed, I think there likely could have been more subjective value extracted, maybe, but impossible to A/B test these things. So I wouldn't feel too much buyer's remorse on that, seller's remorse on that one. I think you got the full value.
Yeah.
Even
Well,
if
and
they
that's
were
what-
maybe willing to pay a higher price, you got the full value.
Now I probably would have squeezed a little bit harder on this on a negotiation, but yeah, I don't know. Like some of my names that are on Ben, I probably need to go back through and double check things. But when I saw this
But
one go through, I
I
was like,
think you priced it well.
oh.
Actually, again, I
Yeah,
was in the
and
10,000.
again,
I was thinking it was a $10,000 name. So, you know, shame on me for
Well,
being
I
underselling
again,
you.
like I would usually, if probably right. I would have shot a little bit higher though on this particular one. Just moonshot type of thing on a bin. Sell through rate goes down, but you get a couple bigger sales out of that. So,
Yep.
but yeah,
No, I think it's all good. You know, it's funny because, like I said, we've gone through a big exercise pricing our names and listing them for sale. And anytime that somebody buys it via Buy It Now, you know, we're always like, we underpriced it, you know, because it's like we could have got more. But
Right.
no, hey man, when you got a lot of names, you got to sell them, and I think that's all good. And so no, good. Thanks for sharing.
Media Options is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, Media Options offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. Media Options believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
All right, so let's keep it moving. We're going to run through the name check and a jet list for about 15 minutes, maybe less, and then call it. So let's do that real quick. So we're moving up on the next segment. As everybody knows, these are names coming up for auction on NameJet. They're all expiring domains. You've got the sheet on the site that will, help give you some guidance as to what the Estabat appraisal is, how many back orders it has. This is the date that we do the show. When the back order end date is, they're private auctions, so you got to get your back order in beforehand. Although we believe there is a way now that you can actually enter into an auction later. So maybe the date doesn't matter. At least it will give you a range of when that auction will end. So you need to get in and around that time if you want to start paying attention to it so you don't miss when the auction ends, and all that good stuff, along with some other data. So let's go through the list and let me know what you guys like or don't like. We started with Drew started the domain game, so we'll keep it moving. Josh, why don't you take a crack at the NameJet list first and tell us, let's go through. There's about 15 names on the list, so I'm going to cut you off after 5 of like, don't like. But what's good?
It looks good. Looks good. I really like that. That's the one that stands out to me. Is looksgood.com.
Yeah.
I don't know. I just feel like that makes a great apparel brand. It's like one of those names that like for sure sells at a certain price range to an end user in a certain amount of time. I don't know. I feel like that's the kind of name I would price at like $20K. So if you can get into that for less than 2, probably pretty good. I really like I don't really like it, but Service Star is cool as well. I feel like it stands out to me. I feel like it would. It's not. I feel like it's not going to go for that much. Probably get into that for like less than 1,000. Good brandable. I want to like highereducation.org, but
you don't.
I don't know. I'm not sure. I'm not sure about it. Like, it's the kind of name that I buy, and I think it's really good, and I'd love seeing it in my portfolio. And then eventually, I would love for it to not be in my portfolio.
Well said. Well said. All right, I dig it, man. That's what's up. All right, give us one more, and then we'll move on to Adam.
What was the first one you said? Sorry.
Looksgood.com, which does look good. It's a good one, and it's positive, and it's a vibe, and you can
He's taking all the good ones.
Clothes, eyewear looks good. I think that's would be amazing for like a sunglasses or glasses brand. Looks good because of the whole look and yet look. You know what I'm saying? Like, it really is. That shit is pretty dope.
Yeah. I'll
Hey
take
JT,
one.
do you know, hey JT, do you know how I look?
You looks
How do you think
good.
I look? How do you think I look?
You look good, man.
No, I look with my eyes, dummy.
Oh man, let's go. We can get dad jokes popping
Cold
off.
open.
You know what I mean?
Cold open right there.
Oh man, we could get
You're
the
welcome.
dad jokes popping off. What do you call like what do you call a potato, man? That's
No,
just,
no, 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 no.
Wait, hold on, time out. He
No,
started
stop.
it. He started it.
No, no,
Hey,
stop.
his line was relevant.
We're already pressed for time.
Wait, but what do you call a potato at a ball game, man? He's a spectator. You know what I'm saying? He's a spectator.
Yeah.
Let's go. Made that one up. All right. Or maybe there's something with what do you call a potato wearing eyeglasses?
No,
A spectator. You know, maybe that we could do that one too. All right, fine. Let's move on. Adam, what do you like or don't like? Oh, I'm sorry, Josh. Did I cut you off?
Josh got one more.
All right. Bridgestreet.com. It's a cool name.
Ooh, I like Bridgestreet a lot too. Yeah.
Probably going to go for too much, that one, compared to what I think the end usage likelihood is.
Bridge Street is like that could be. I see that as like a brokerage, or I mean, any kind of something financial, or
That's the kind of name
also
that
fashion too.
as domainers, we just like, oh, that's a cool name. Like that's a like, and everyone wants it.
It's the art. That's the art part of this game.
Yeah.
Yeah.
And then it just sits there, and end users are like, no, I don't fucking want. Why am I going to call my company Bridge Street?
What will that go for?
I think it'll go. I think it'll go for at least. I'll say $2,500.
Oh
I think-
God, that's an $11 name a couple of years ago. Maybe.
Yeah,
10
I
years
actually think
ago.
it's going to go higher than 2,500. That would be my guess. If I had to put money on it, I would put it on the over on that for that name.
Why? Is it because of the extensions or what?
No, and it's interesting. I guess it would, look, I'd have to do the research to see how many companies are out there that are actually using Bridge Street, and what do those companies look like, and are any of them funded, and size and all that good stuff. But I don't know, man. There's just something like I think just based off of the vibe, kind of to Drew's point about the art of it, just based on the art of it alone. I just think that's one of those that a lot of domainers are going to recognize that there's, that's a cool, usable name, great brand, and pony up the dough. I don't know. That's just my, 35 back orders. I don't know when the back order ended. I'll have to look at the list that we provide on domainsherpa.com. If you go to the site and check it out. It's not going off till November. It's already got 35 back orders. I think that's going to be a pretty good one. So, all right. So
I like, are you ready? I like market reports. I like support team. I don't really care for singled. Singled is like, I don't know. It probably will sell. It has, the dating type of.
Yeah, there's some of that. What else would singled be? Some kind of single serving,
baseball, and he's the guy.
Well, it's got the ed at the end too, so that could be education.
He was singled out. Could be some
singled out. Maybe some kind of single serving type of packaging type of something. I don't know. I don't know what the use of that one is. I would agree. That's one of those fool's gold type of names. Go ahead.
Toilet paper.
Toilet paper, huh? Like a company that sells like some kind of
no
travel.
No, I mean the domain is literally terrible. It should be used as toilet paper.
Oh, gotcha. Yeah, that's a
singled
name that
is not a good domain. It's just a bad brand. It doesn't sound good, doesn't look good, doesn't mean anything good. It's just singled. I don't see
singled.
Anybody. Yeah, that's what you call a false friend.
Yeah, fool's gold.
Yeah.
All right, Adam.
Basins doesn't sound good to me either. I don't know. Maybe there's something out there, but
so okay. I think that might be. Is that 4 or 5? You're
I don't
close.
know.
You're close to the cutoff.
I'll cut out of that. Web.com
Basins is another one that I think is interesting. It's like, is there a market for basins? Like sinks? Maybe sinks if you're a sink company.
Well, there's a geographical definition of basins, like a valley. So maybe there's like but it's not going to be something big. It's not going to be something highly commercial. But there's probably somebody out there that there's a home for basins. That ain't going to make you rich.
Yeah, well, we always say about appraisals. You got to take those with a grain of salt. It's got a $35,000 or $34,000 estimate value, which seems pretty wild to me. Is Basin a last name? Maybe it could be Basin's, like a store or a restaurant. You know, like
Yeah.
oh, Tommy Basin opened up a restaurant and calls it Basin's. You know what I'm saying? Like, you know, I don't know.
Yeah. And I bet Tommy's paying 35 G's for that domain.
Exactly right.
You know what I'm saying? You got to flip a lot of burgers to pay back 35 grand for a restaurant.
Yeah, no, I feel you.
So will Basin sell for more than what was the other one that
Bridge
Josh
Street?
said?
Oh, that's
Yes.
Bridge Street.
Yes.
Basins will sell for more than Bridge Street.
Yes.
But the sell-through rate on Basins is like half of what Bridge Street is.
Less than that.
That is a really good,
And the
interesting
upside,
hypothetical. I love that, Adam. I love that.
It's actually a great representation of the domain industry itself. It's like people, you know, we've said this before. Every time you make a purchase decision or an investment decision, you might think you're making an individual decision about that particular name. But every decision that you make as an investment is always a relative decision. You are making a relative decision relative to other opportunities that you can invest that money in. And so whether or not the domain you're buying or the investment you're making is going to outperform the other, you know, opportunities you might have at a given moment in time is basically what determines whether or not it was a good or a bad decision. And I would say, you know, Basins is one of those ones that makes people feel good because it's a one word, you know, it's whatever, right? But ultimately, very limited pool of potential end users, very limited potential commercial applications. You're going to hold it forever, and you're going to hope for, you know, it's probably going to go for like, I don't know, 4 to 7 grand. And then you're going to be holding on to it for a decade, hoping to sell it for 25. And, you know, meanwhile, you could buy, you know, like a Bridge Street. If you say you could pick that up for 2,500, I think that's easily a $25,000 name if you get the right end user. Let's say it's in that 15 to 25,000 bucket. Okay. And, you know, so the opportunity there is far better because you're going to have a lower entry cost, a higher sell-through rate. All of this is obviously speculative, but based on the art, based on experience, based on, you know, how these things usually go, that's what I would expect. It's probably an about equal potential end user price, but you're going to have a lower entry point on Bridge Street or a name like Bridge Street and a faster sell-through rate.
Yeah.
So you
I'm with
bucket
it, man.
Bridge Street into 15 to 25.
Yeah.
Yeah, it's interesting. You know, as I'm sitting here now going down a rabbit hole about both Bridge Street, which there are a number of Bridge Streets, period, as well as a place in Bradenton Beach, Florida, that is Bridge Street.
None of
Bistro.
that has any value. The only
None of
thing that
that means
matters
shit to a
is
tree,
there
I
a
hear you.
corporation
I
saying,
know, I
okay,
know.
you want to sell a domain for 25 grand. You need a company that's worth at least 2.5 million or that has raised $250,000 to $500,000 at a minimum, right? That's what you need. That is the qualified buyer for that name. So if you don't identify an end user that meets that criteria, then there's nobody to buy that name for 25 grand.
Yeah, well, there are a handful of other folks. There's a couple of different other
At least not today.
pieces going on. Yeah, and well, hold on, and then but
But
then I also
you do have a long history. I think you guys are both right. I think you have a long history with names like Skybridge, Longbridge, Oak Bridge. You know, there's a lot of
Bridge.
bridge
a lot of
in
bridges
the financial world.
A lot of
And
bridges,
you know,
what I'm saying, we're building bridges here. You know, we're not burning bridges, we're building bridges. That's like
burning some, building others.
And then I'm also down this basins rabbit hole of like, oh, okay, so you know, basins, you have buckets, you have sinks, you have a whole bunch of different, not to mention the geo.
Okay. You know what?
Mhm.
That's another application. I'm in the process of building a farmhouse, and we're literally looking for a basin sink. So basins
Cool.
could be, and those things are expensive.
Oh, that's
These
why if you
big
Google
farmhouse
basins,
sinks, these things are
yeah,
expensive.
you got to go
What
one
about
big
Basin
sink. That's
Bridge?
Basin Bridge. What about Basin Bridge Street?
Basin
All right.
Street?
You know what? All right, Drew. What else? You
All
got
right.
any other names on the list? And then we're gonna move on and call it
All
because
right.
we overturn.
I love highereducation.org. Love that name. I also love Looks Good. I think it's just killer name. I think Market Reports is interesting. There's a lot of money to be made in just recycling financial advisory information and, offering, here, $9.99 a month. You can download these market reports. And it's like, got a gold report, a silver report. Yeah. That stuff is easy to, there's a whole market, right? Yeah. Digital product. It's a great business. I think that's a very interesting name. Pittsburgh real estate is long and clumsy, but it's just a banger. I mean, if you are a Pittsburgh realtor, hard to find a better domain than Pittsburgh real estate, right? And so I think, that's another name that's in that easy 10 to 25,000 bucket. And back in the day, Rob Grant, Lana Del Rey's papa, he used to pop off these big city name realestate.com domains for 100 to 250 grand. Like, he used to be, at least 3 or 4 times a year, he'd be on that Dean Journal leaderboard with a, Atlanta real estate or New York. I think he still owns New York real estate, but there, I remember he sold like Jacksonville real estate for like 100, and there was like, anyways, he used to pop off with $100 to $200,000 sale of these big city name. I haven't seen any in a long time. He kind of had he cornered the market on those, like big city name followed by realestate.com names. So anyways, that's a banger. I don't know that you're going to get 100 grand out of it anymore, maybe, but I think, it's an easy 15 to 25 and maybe more. But it's just,
that it's better than realestatepit.com.
Yeah. And then I like Service Star. I think Service Star is like, it's got, alliteration. That's a banger of a name. That's one of those names that, somebody pays a branding company $500,000 to come up with. And then,
So true.
it becomes like a giant Fortune 500, like ServiceNow or, but Service Star is I like that name a lot. I think that's a really cool brand, but again, I think that's exactly, again, in that $10,000 to $25,000 bucket, probably $15,000 to $25,000 bucket. But it's also one of those names like Restaurant Finder, where if somebody, it's like in a vacuum, I think it's a $15,000 to $25,000 domain. But if you actually analyze it and you think about who is the buyer for that name, the guy that steps up most likely, there's probably many buyers, but there's a lot of small buyers, but the one that steps up and really pays the price for that name is somebody that's going to be competing against all of these other, local service local service, let's say comparison sites. And it's a super competitive market with big dollar rewards. There's tons of private equity there. And so I think it is a name that, doesn't mean that buyer does emerge, but if they do emerge, it's probably actually a 75, 100, 125 name. But you're rolling the dice, right? It's probably an easy sale over a 5-year period of time for 10 to 25
grand. Yep. Agreed.
But you might roll the dice and lose a bunch of those 10 to 25 buyers and land on, a 50, a 75, 100 grand buyer.
Well, and I'll tell you, so just being on the call on the show and going through and doing some quick searches on a few of these names, Service Star had probably the most varied usage of any of the names that we're looking at, where there's Service Star Capital, there's Service Star Heating and Cooling, there's Service Star Chemicals, there's Service, you know what I mean? It's like
it's got a secondary use too.
There's a whole lot of
Service Star is a military thing.
Ooh,
oh, really?
You get your star. Yeah, you get your stars for your years of service. Like Bronze Star, things like that.
Oh man, so you can almost get so that's a whole nother thing. Or if you have, some of these companies that get money to, because they are veteran founded and things like that, or veteran run, Service Star Realty, So technically, you could maybe even get the same buyer that's going to buy Service Star and PittsburghRealEstate.com. So, you know what I'm saying? It's 2 for 1 out here in these digital streets. But yeah, but you're right. It's a miniature bronze star, and authorized to be worn by members of the various armed services. And so yeah, Service Star Plumbing, Service Star Freight,
It's
Service
a
Star
banger.
Development Company. I mean,
That's what I'm saying. You probably, I didn't even look, but
Service
it's one of
Star
those names
Homes.
where you're going to have dozens of those low end. When I say low end, $10,000 to $25,000 buyers.
Yep.
Dozens of them.
And here's what I'm
But
going
you're
to
going
tell
to
you.
have, and just because you have dozens of them doesn't mean one of them is going to be able to step up. No, they are limited by the capacity of their business, right? These are businesses that are regional or local. You know, they don't have the capacity to pay a $50,000 or $100,000. So the upper limit on it is that 10 to 25,000. But then there's the one guy that says, I'm going to be a national brand and I'm going to consolidate, leads and dole them out to all these local and regional service providers. And that guy wants to be Service Star. He's paying 50, 75, 100, 125, 150.
Yeah, so I really like Bridge Street a lot. I like Service Star even better, having done a little bit of digging. Some pretty interesting names on here. I think some of these.
Yeah,
but,
I think careeradvice.org is interesting. It's going to be a whole bunch of useless college grads that are going to need a lot of career advice.
I like career advice better than I like highereducation.org. I think if you're looking at those two .orgs that are kind of sort of similar, or they're the only two longer .orgs on the list. I think career advice, but both, depending on where they end up, can be utilized for, a lot of different reasons for, ways by people that are going to, spend money on those names, because there's a lot of money to be made in all of that stuff.
What do you think Paradigm.org ended at the other day?
Paradigm? Oh, I love that name.
Where was it selling? Name. That was selling on NameJet, right?
I loved it too. Yeah, it sold on.
So I would say that name probably went for like 20 grand. Because
in auction?
Yeah, 15.
I would have said 12.
What did it go for, Josh?
11.
Bang.
Yeah.
You know what I'm saying?
I went up to 10 on it. I really wanted it. I really, really wanted it.
Great. Killer name.
Yeah. Paradigm is just a great, brand name. It just exudes fucking glowing growth, and just the Paradigm, it's the top of the pinnacle, and it's positive, and it's pretty cool. It could be technical, it could be all sorts of
wait, what are you talking about? You're confusing Pinnacle and Paradigm.
Yeah,
no, Paradigm is still isn't Paradigm like the optimal approach or whatever?
No, it's like a
I think it's basically
it's a typical example. A model. It's a model, though. I guess that's what I meant.
Model. Yeah, I was gonna say like a set of constraints is Paradigm is basically like a set of constraints or a set of conditions under which you're operating, which is
it means pattern. It means pattern and all that. And I guess in my mind, I was thinking of it as the model, not just a model, if that makes sense. You know what I'm saying? So, but you're right. I probably gave it a little bit more of a positive than it meant to be, and a little bit more pinnacle than Paradigm. But hey, look, it is what it is. We're just saying a lot of words up here. You know what I'm saying? I get paid by the word. But
thank God that's not true.
It's not true. It's not. I wish it was. All right. Well, look, guys, we're over time. This was a great show, though. We covered a lot of ground. Anybody have anything else to close with before we close it up? I'm going to holler at everybody later about we got to get a Sherpa Ween scheduled. So everybody be on the lookout for that. I got to get with Jen. We got to figure out the timing, but we want to try to do that here in the next week or so before the holiday. But y'all, anybody else have anything else? I mean, Josh, we didn't talk about your pickleball, what you got going on.
I will actually be awake, so try to schedule that as soon as possible, because I'll probably still be able to join, but I'll be checking out the progress on the farm.
Oh, cool. Well, you're gonna have to get yourself a costume, though. You know what I'm saying? So,
what are you growing on your farm?
Well, we're right now. We're growing a house. Yeah. That shit is slow growing. Let me tell you something.
Slow growth. You know what I'm saying?
Yeah. But we will grow a lot.
Josh, are you still with us?
Yeah.
What'd you say?
I got nothing for wraps.
All right.
You're looking for raps, JT.
Well, I did play pickleball for like the first time the other day, and I was playing my kids, and I was handling business. So I literally was telling them, I'm like, I could beat Josh out here. I'm gonna go. We're doing a tournament for the school, like a charity event. I'm like, I'd enter that, but I'd win it. You know, I'm like, I'm the best. And my kids are like, settle down, Dad. You're literally like, you got bad knees and a bad back, and there's no way you're
Settle.
beating Josh.
Get out of
Like,
the kitchen, Dad.
We don't even know anything about Josh other than he's a good pickleball player. Therefore, we know you have no shot. But it was cool. I could see why everybody's into it. It really is like a whole ping pong tennis vibe, and you know, I could see
It's
why
fun.
people are really enjoying it.
It's a good
So,
time.
yep. All right. Well, hey, I appreciate you guys, as I say on every show. First of all, to you guys, more than guests, you guys are the co-hosts on here, and you know, taking the time and sharing all this stuff with the audience means a lot. It is really what Domain Sherpa is all about. So thank you very much. And to the audience, like I say in every show, thank you for tuning in. Without you, there is no us. So we hope you enjoyed today's show. And if you did or didn't, let us know. We're not hard to find. Otherwise, we'll see everybody next time here on Domain Sherpa, where all roads lead to domains. Thanks, everybody. See you soon. Peace out.